back to another episode of Policy and Profits. I'm E.J. Antoni. I like to play an economist on TV. More importantly, joined by the one, the only trader extraordinaire, head of Ascalon 6 Capital, Anthony Esposito. Mr. Esposito, how are we doing today?
Mr. Antoni, I'm doing fine. And you do more than play an economist on TV. You are an extraordinaire as well. I am doing fine. I hope you're doing fine. I am dying for the month of March to end. Trading has been insane. News flow has been insane. We're going to talk about that a little bit. And as we get through this Iran war conversation and try and discount what exactly the results will be, I noticed from you, my friend, which I'm on your handle every day on X, you're starting to talk about rates, and rates are going to be one of the things I believe will be the conversation coming out of once the shiny ball of the Iran war fades or becomes boxed. We're going to start talking about rates, and you're talking about them now. So I want to pull up the first visual, and I want to ask you to talk about these auctions. I know there was another one today that you just mentioned to me before we jumped on, and you had posted this responding to Zero Hedge. Talk to us about the tail here. Talk to us about what rates look like they're doing, and then what the effect of that would be, and what global rates look like coming from central banks and coming from the Treasury markets, the sovereign debt markets.
Sure, Anthony. So in this case, we're looking at a 5-year, and unfortunately, this one tailed. The one before it tailed. The one today tailed, and these aren't small, right? These are pretty big tails. All of them have been multi-year. In terms of how big they are. In other words, this was the biggest tail in at least a couple of years here. And it's really, really troubling when we have $10 trillion of debt coming due. It's also really troubling when we look at interest rates, look at Fed funds rates. And a lot of traders not that long ago were pricing in a whopping 6 cuts this year. In other words, they thought we were going back down to near zero interest rates. That was very quickly pared back to 2 not that long ago. And right now, a lot of people aren't pricing in any rate cuts, Anthony. Now, obviously, some traders still are, but a lot aren't. In fact, a growing number are pricing in 1 rate hike this year. So again, this is really scary. It's very, very troubling. What's going on here? Why are we seeing these auctions tail so badly? Some of it has to do with the fact that we're likely going to see government expenditures go up, right? The Pentagon's asking to borrow an extra $200 billion this year. In other words, grow the deficit by almost 10%. That's really bad. I mean, there's no other way to put it. We were on a path where we were reducing the deficit, both in real terms and then also reducing the deficit as a percent of the economy. So it was good news on that front. But now it's going in the opposite direction. So the expenditure side is not looking good, but also the revenue side has really been dampened here. And that's the second of I think the 3 mechanics that are at play here. As people spend more and more money on energy because prices have gone up so much as a result of the conflict with Iran, you're going to see slower economic growth. On top of that, you also have the problem of it's not just higher prices and that's it. It's higher prices due to less supply. So the supply shortages are already starting to bite in different places. I saw a report today. I'm having a little trouble verifying it, but apparently you have hundreds of gas stations in Australia right now that are literally just out of gas. They don't have any fuel. Some countries like Vietnam and the Philippines are also facing huge shortages. It right now seems to primarily be Asia because they get so much of their oil from the Middle East. The Philippines, for the first time in 5 years, had to take delivery of Russian crude because it was the only thing they could get their hands on. When we look at Europe, the futures markets have been really bad in terms of energy prices. The last tanker of LNG, I think, just got delivered today. So everything after today is going to be essentially, or everything that does not happen, I should say, are misses. So these were deliveries that had previously been scheduled, but have not actually yet been able to leave the Gulf due to the Strait of Hormuz being effectively closed. So now you're going to see those energy shortages, I think, start to bite. Less energy going into an economy means less output. So again, a reduced tax base means less tax revenue. And again, that is where we're going to see a reduction there. But another big thing that we're noticing here with these auctions, but beyond just the headline of, okay, the yield was higher than expected, so we had a big tail. But what about the internals? The foreign demand in a lot of these auctions recently has just evaporated because foreigners are spending all their money on oil. So in other words, they're actually selling treasuries in a lot of instances. And this is nothing new. This is exactly what happened in 2022 when the war in the Ukraine started and energy prices spiked then. Foreign governments are selling U.S. treasuries and using the proceeds from that sale to buy more energy, or I should say to just buy really the same amount of energy. They're just spending more on it. So all of this to say, this really, I think, goes back to energy markets. All of the different things, all those three mechanics that we just described, it all goes back to energy. And unfortunately, none of it's good.
No, I would add to what you said about the selling of sovereign debt and treasuries to buy crude. And we're going to talk about the rates again because I just pulled up the monitor for the rates. But I would add to it, this is slightly different than 21-22. 21-22, you saw a move into gold as a safe haven. What we're seeing now is sovereign banks, a lot of retail selling, but sovereign banks crushing gold and liquidating positions in theory in order to have dollars on hand and be able to pay for the high price for energy, for crude, for natural gas. So we're seeing a little bit more of a disruptive, which makes sense because of the infrastructure being destroyed or being damaged, because of where the fighting is going on, because of the straits being closed. It makes more sense that this is more of an energy shock than we saw with Russia, Ukraine. But I think not only are we seeing the sale of treasuries, we're seeing the sale of gold. And we've seen gold get absolutely obliterated in this month. I mean, we were down from 5,600. We're down at 4,400 now. We were down at 4,100 just a couple of days ago. So it's been an aggressive move out of gold. As far as rates go, we always talk about this where we're looking at the overnight lending rates versus where the yields on the bonds are. And the yields on the bonds are very, very important here. The 2-year at 3.98. So remember, we have the Fed funds rate at a 350, 375 target, right? 375 upper end of the range.
Right.
We have 3.98 on the 2-year, 4.09 on the 5-year, 4.24 on the 7-year. The 10 years at 4.4, the 20 years at 4.96, and 4.933 is the 30 years. So we're seeing yields in the market. To your point exactly, the market is saying lower growth, higher inflation costs, higher yields on fixed income, which is going to make money more expensive and borrowing more expensive. And we saw the 30-year go back up to, what was it, 6.38 today, 6.48 today. So back up, we were sub 6 briefly on the 30-year fixed mortgage. And now we're back above 6 and moving higher. So this is definitely a concern. And as you said, we're seeing it in the auctions and we're seeing it in the market. So something to keep an eye on. And I don't know. The market's trying to discount how long this will be and what the real damage will be, but I think it's going to be a little time before they're able to actually do that.
Yeah, exactly, Anthony. We're basically just trying to price in risk here. Nobody knows, and I'm sure you'll want to talk a lot more about this. Nobody knows what's going to happen in the next 6 minutes anymore, let alone 6 hours or 6 days or 6 months. So because of all this just unprecedented volatility, it's too difficult to say which direction things are going to go. So you have some people insanely long, you have some people insanely short, and tons of folks in between, right? You just simply don't know which way any of this is going to head, unfortunately. I mean, the war could basically wrap up in the next 48 hours. It could be 48 days. We literally just don't know how it's going to all shake out. There's too many unknowns.
Yeah, there's a ton of unknowns, and the risk is huge. And I don't know. President Trump has said, and look, we've been calling for 6,400 for almost 2 months now on the S&P on the front month futures, which would be 6,300 on the cash. We've gone through that weekly chart. I think we've gone through the progression of that chart for 5 weeks now on the podcast. So the market was ready to break anyway, based on our work here, based on momentum trend and some other items, but. President Trump is out saying, and he's actually right, saying I thought the markets would be lower and I thought crude would be higher. I agree with that. I don't think that we've seen the floor in the market. I don't think we've seen the lows, but to date, people are marking it up and trying to discount it, but I don't think that we're fully discounting. I don't think the risk is fully discounted yet. Having said that, I mean, what the hell's going on with the markets, right? We're seeing Polymarket has some investigations going as far as insider trading. We have these massive crude positions being taken, massive gold positions being taken, and now they're moving into the S&Ps. So we had a post out
positions
which kind of goes through
and
it.
positions being taken right before a major turn of events, right?
Clearly in the know, clear positions that are being taken, sizable positions being taken right ahead of events, which is what I want to get into. And I want to really talk about what we've done here for the month, so no one thinks I'm sour grapes and just upset because we haven't done well. We have. What I don't like is a market that's getting skewed and getting played in an unfair way, in an unethical way, which is what I can see. So out on X, Kobayashi Letter posted this. It was about 6:50 a.m. Now, let me give you a backdrop here. So we have, and actually take it off the screen, make sure the details of it I get right. 6:50 a.m. on Monday, 1.5 billion in notional of S&P futures bought in one tick, right? So what happened was he said we went up 30 bips, 0.3% higher. We actually went up 38 bips higher. I was sitting in front of my screen. 14 minutes later, Trump makes an announcement that they're having productive conversations. And by 7:10, the S&P had added $2 trillion. So to put it in perspective, that was over 3% in a rally in minutes. Okay, that's absolutely insane. The purchase of 1.5 billion gained $60 million. $60 million in minutes. So let me just back up. I actually want to show you. This was their chart, which was great. I'm actually going to throw my chart on. This is my 30-minute chart for the S&P 500. I'm going to set the table for you on this trade. I am literally trading from the open on Sunday night at 6 p.m. in this instance, and I was still at the desk trading the next morning. So when this occurred, I was actually trading equity futures live at my desk. This is my 30-minute chart, the chart I actually trade off of. And what was going on at that time was we're skewed to the downside. So obviously in equities, and we trade the Russell 2000 equities and the S&P 500 E-minis. We were short. We had been working through that position. We were down around the 6,500 level at that point. 6,505 is exactly where we were. That's the end of that red box, right? So I'm trading overnight, end of the red box. We're moving, I don't know, 40 bips on the night, 60 bips on the night, top to bottom. That's the whole range, the whole night. And then all of a sudden at the end of that box, somebody comes in, takes stock, takes futures up, right? Takes them up 40 bips, 38 bips. It settles back down. I immediately said out loud, there was someone with me on the desk. I said, that is messed up. That's wrong. Something's going on. Now, I've been doing this for 30 years. That looked so off to me that I actually thankfully covered my shorts in the equity space.
Wow.
And kept watching. I got up from the desk at that point. I went out to the snack area to get a coffee. And I had the trader call me as soon as I got out there and said, get back on the desk. We're rallying. Trump made a comment. This is how quickly this happened real time. And he said to me, we're at 66.50. And I said to him, you mean 65.50? And he said to me, no, 66.50. I ran back in. I sit down. We're at 60. We rallied up to 67.50. We were up almost 4% in a matter of minutes off of a tweet. And I watched the person, whoever it was, just a few minutes earlier, take contracts ahead, jump them up, and then sit and wait. That to me is so insane. To watch that happen and to see the manipulation within a market that is already insane is just unacceptable. Now, today, we were heading into the end of the day. Again, I've been doing this for a long time. The short trade today, obviously, it was a messy day as they've been. Short trade today was tough. We did fine. We basically had some options on. I wasn't really in the future space too much. because of these comments, because of these quick radical spikes. End of day, I see some peculiar action in the market, and we were down pretty big today. I guess at our lows we were down, 1.5, 1.7%. We get long, start building a position coming out of 4 o'clock at 4:11. Now let's keep in mind 4:11. What's happening at 4:11? Well, at 4:11 the cash markets close. We're in after hours, so you can trade U.S. equities, but it's not nearly as liquid as during trading hours. Indices are closed. We're heading into 4:15 where ETFs close and the options for ETFs stop trading. So we're right at that spot. Trump tweets at 4:11. As per Iranian government request, please let this statement serve to represent that I am pausing the period of energy plant destruction by 10 days to April 6th. Talks are ongoing, despite erroneous statements to the contrary, blah, blah, blah. With that move, we saw a spike in the S&P futures from, stay with me now, because I want to make sure that we saw a spike of 1.2% within a minute. And when I say a minute, I don't mean 5 minutes or 10 minutes. 1.2% within a minute, we went from 65.20-ish. I was actually long at 65.26 on the contracts, which I'm extremely happy about. We hit a high of 65.97. That's a 1.2% move up in the futures off a tweet at 4:11 with just no real reason. I understand the tweet. I understand the communication from the president. I understand how transparent he is, and I appreciate that. But when you're looking at the volatile, violent action in the market at random, I would love to have a fireside chat, weekly chat with the president and eliminate all the tweeting, right? And just have a fireside Friday night chat, Sunday night chat on X. Just have a 10-minute video, 5-minute video. I love the Department of War updates. I think they've been fantastic. That's great. We do that once a week or twice a week. I want to go back to the fireside chats. The X posts are just too much. They're adding too much volatility to the market and too much egregious rips and turns and pivots. Now, I just want to end by saying this. I'm not sour grapes. We have had a fantastic March here. We are up approximately 7% on the month. I'm very happy to say that. And we're heading into the last 3 trading days of the month. So for me, we've managed this really well. I'm very proud of our team and the fund. I think we've done a great job. But I do have to say 2 things. I want the fireside chats in case President Trump is watching. And I would like the person that is stepping in front in the oil contracts, the gold contracts, the S&P 500 contracts. You've done enough. Your hand's been in the pot long enough. Step back and go away, because what you're doing needs to stop. It is unethical. It's illegal. It's not appropriate. For heaven's sake, just step away and stop, because it's very frustrating and everybody sees it. Anyone that's trading markets that has any kind of clue and has been doing this for any amount of time can see the manipulation. I can smell it out a mile away, and it's just not acceptable.
Yeah, and to your point, Anthony, this is basically exactly the same thing that we saw in, I don't know if it was Polymarket or Kalshi, one of those two, right before we had the whole operation in Venezuela to go in and capture Maduro and drag him out of there, right? Right before that, somebody made this huge bet on getting Maduro out. I don't know if it was by the end of the month or end of the year, whatever the case may be. And it was such a big bet that it actually skewed the odds, right? Because that's how these things work. If you put a big enough bet in place, what ends up happening is that the odds have to adjust, because it's like when you're betting at the races. The house doesn't want to lose money; they have to have it covered in either direction. So, this is not the first time this has happened. We've seen similar patterns, unfortunately, with folks in the admin regarding things like tariffs and how the Supreme Court case was going to go. There definitely seems to be instances where people are, as you said, acting unethically and using that insider information not available to the rest of us. Absolutely.
That's right. Now, I will say that having talked about the fund, which we talk about to some degree and not, I will say that we are moving through the first quarter in a very positive way. I'm very happy. We've outperformed our comps, our peers, for the S&P and the Nasdaq for sure. And we are in a fundraising process right now for Q2. So I'm going to put my email out now as we finish up. Anyone that's interested in speaking to me about investing in the fund or getting a look at what we're doing, what our performance numbers, what the prospectus looks like, I would love to have the conversation. The email is anthony.esposito@ascalon6capital.com. The 6 is a Roman numeral. It's VI. You can go out to ascalon6capital.com to take a look at some of the media that I've done, some of the posts that I have. Take a look at a description of the portfolio, what our process is, and kind of what our investment universe is. So moving into the phase for Q2 on a cap raise, and happy to speak to anyone that's interested in having that conversation.
Well, Anthony, thanks so much for all the insight yet again on the week. And I'm always fascinated to hear about, I know you've described, trading on the upward trend, on the downward trend, trading in churn, trading in times of volatility like we've seen today. And then even, again, so great to hear another example of trading in this instance when you saw a move in the market and you knew you had to cover a different position. So thank you. Just incredibly enlightening how the fund operates and how you guys make money.
Thank you, EJ, and thank you for the expertise as always on rates. We definitely need to keep an eye on rates. I think as we come out of, and you and I talked about this, as we come out of the Iran issue, the Iran excursion, I think we need to look at rates. We need to be very wary of what the market expects as far as liquidity in the system, because that's going to be drier than expected. I think we need to start looking at private credit for real. And I think we need to really do a deep dive into valuations, and we've done that. You and I have done that, and I've talked about it a lot. But the reset of the market down 6% has not taken any of those things into consideration. Forget whatever structural damage we may see and have to deal with from the war. So as we move forward, we'll keep talking about these things. The conversation on rates, super important. And I definitely want to keep following up with you on that. We'll keep an eye on that as we move forward, EJ. So thank you as always for the help. Thank you as always for the partnership and for the expertise. It's always a pleasure. And I know you were going to stop by the trading desk the other day. We didn't get to see you. So next time you're passing through Philly, please stop up. Would love to see you. Grab a bite to eat. Perfect.
Hey, it would be my pleasure, sir. Let's do it.
Thanks, man. Talk to you soon.
Till then.